G'day, guys. Welcome aboard. It is Hump Day. It is the last day of July. It is FOMC Day or Eve for most of us. That kind of means a fair bit to me. I'm probably not going to be trading too much, if at all, leading into the FOMC announcement and it being the last day of the month. So, this will probably be a short session today, given that I am by myself. Ash is tied up in meetings in Singapore, so he won't be with us again today. Perhaps tomorrow he might duck in and say good day. I did have a chat with him overnight, however, and I'll have a little bit of footsie news for you in a little bit. But first up, let's take a look and see what's happening around the traps. Around the traps being the Forex factory, if I can actually find the Forex factory. Did I have this problem yesterday? I think I did. Disappeared again. How bizarre. There we go. No. Yeah, that's where we are. Cool. All right, so the calendar is telling me that so far today, today being Wednesday, as I said, Hump Day, we have had ANZ business confidence out. But before that, we had manufacturing numbers coming out of China, and that was a slight beat and a slight miss on the non-manufacturing purchasing managers index. On balance, while they weight the manufacturing price purchasing managers index higher than they do the non-manufacturing. So on balance, I suppose we would have to say there's a slight win there for China and perhaps even Kiwi and Aussie. Not so sure the Kiwi, but we'll check on that in a sec. Yes, that business. The reason I'm not so sure on the Kiwi is because we had a bad print on the ANZ business confidence number that was posted many hours ago. Yeah, look, earlier this morning, let's put it that way. And then that led us into the Aussie news CPI figures, a good number, a really good number for the CPI quarter-on-quarter figures. I think that's an annualized, CPI of around about 1.6, which is pretty good for the Aussie, and the Aussie has shot on that news. Also, the trimmed mean CPI, which is really the figure that the RBA look at when they're considering interest rates, etc., was a good number as well. A hit forecast, but obviously better than last time, and that's encouraging and may just, I don't know, I won't say put a halt to any thoughts the RBA might have had around next interest rate cut, which of course we will find out next week. I wonder if they're forecasting that yet. Let me take a look, see into next week. That's a good question. August the 6th will be the RBA, and they have it posted as a non-moving cash rate set to be static at 1%. So there you go. Now we know. If that were already posted, which it was last month it was posted way out, where the economists or whoever frames this this calendar was forecasting exactly what happened, of course, but no surprise, that the Aussie was cut. Was it last month or the month before? Can't quite recall, but they posted that forecast way prior to the event. Anyway, so we've got a potentially bullish Aussie today based on the numbers that we're seeing. We have later in the day, not so much in the UK session, although there's a little bit of Euro news splattered around the CPI numbers and Spanish GDP figures quarter on quarter, not tipped to rock the market too much. ADP non-farm employment change, look, I don't think that generally has too much of an effect on the market as well, unless there is a massive beat or a massive miss. One would expect not too much movement there. The GDP figures coming out of Canada will affect that currency without any doubt, especially if, again, there's a miss or a beat. And, of course, the headline act for the day and the week, and probably even the month, is the FOMC, the much anticipated FOMC statement, where it is widely predicted, that the Fed will reduce US interest rates by 0.25% and give us a 2.25% interest rates in the States. If that is the case, I think the market's kind of catered for that already. I don't think there'll be too much movement based on the release of the number, but the accompanying statement, of course, will be focus of attention, as will the press conference, which follows 30 minutes post the announcement. So volatility expected around that time, in particular, of course, if they go more than 0.25% or if they don't move at all. Then there'll be some fireworks. You can guarantee that. I'm not even going to enter into a guessing competition, but I guess I'll go with the flow and suggest that there will be a 25 basis point cut, and that shouldn't, as I say, rock the market too much. It will depend on what Jerome Powell says thereafter as to what direction we're headed. The one thing I can predict, not with any certainty, but I'll predict it anyway, is that I don't think there's going to be too much market movement between now and then. That could, of course, be entirely wrong. And if it is, then fine and dandy. But what it does tend to do to me is put me into my shell a little bit. And I tend not to trade particularly US dollar-based currencies, currency pairs, at this time, because I think the market's going to be very compressed and be centered around perhaps the daily pivot area. I will, before we close, and I'm not having a long session today because Ash isn't with me, and it is FOMC Eve, if you like, and I don't expect too much market movement, but I'll go through what I'll have a look at before I say anything. Yeah. I'll go through the potential for an FOMC statement breakout trade, which is one of my favorite plays. When FOMC is around, we'll go through that when I've been through the or around the grounds and give you an indication as to what I might look to be trading, if at all, today. And as I said, it's likely not to be too much, given that we have an FOMC statement pending. Let's look at the Kiwi. We were trading the Kiwi short, as those of you who frequent the TTR shows will know. We traded that back here. I exited the trade pretty much exactly where price is right now. That was overnight. Since had a little bit of a dip down, and now looking to bounce off this level, the 66 cent level. What I anticipate happening here, and let's get rid of a few of these lines so you can actually see what I'm anticipating. What I anticipated all along was a bounce here, but a substantial bounce here, and at least back to the weekly pivot, maybe even back to the 67 cent mark, which is around this area here. Why? Well, because when I play reversals, and this is not a reversal yet, it's a potential reversal on this this bull trend, if you like. It's not converted yet, but it's damn close. It's getting close to taking out this low here. That will convert it for mine and turn it into a bear trend. You could argue that we've already broken that bullish trend. Certainly the trend line's been broken, hasn't yet been retested. And look, to be absolutely frank, this could disappear, no question at all. And I'll then be wishing that I stayed in the move. But what I see is a strong support level here, and I do expect a bounce, and that bounce to come up and retest this area here, backside of the trend line that's been broken, forming a right shoulder, which would give us a massive head and shoulders sitting right there. And if that is to complete in symmetrical fashion, then we should rocket, or waterfall, if you like, is the preferred terminology in Actions to Wealth language. I would be looking to trade this short from this level here once we get back here, if we get back here, of course. and trade to complete that, what eventually would be a massive head and shoulders. We've already played that once, the head and shoulders that we played here. That was a break and retest of the neckline. I'll be looking to do exactly the same thing if that were to happen again. So the bias is most definitely bullish, anticipating that move back to this area here. Trading it, as I said, it is FOMC Eve, if you like, and that makes it a little bit tough for me to want to get into the market, because anything that's trading against the US dollar at the moment is pretty much a fundamental move rather than a technical move. And that's why I'm not a fundamental trader. So that is why I'm a little bit on the cautious side when it comes, I didn't mean to do that, when it comes to trading against the dollar at the moment. Look, I'm not ruling it out entirely. If I do see a setup, then absolutely I'll look to trade it. But at this point in time, my bias and my setup don't see eye to eye. What do I need to see to trade this long is probably the question that I'm asking myself. And that's not going to do me any good. Didn't I just take this line off here? That's probably the line I'm looking for here. And we are approaching that. So, look, this is not without chance. I thought I got rid of that. There. Okay, so this is not without opportunity, of course, because we do have a nice confluence area here. We've got a daily pivot, which has indeed been tested. We're looking to come back and retest that. If we did so, I'd really like to see this bounce back. And so if I had a pen, I'd show you, but this platform doesn't allow me to use one. I'd like to see a break here. So a break of the trend line and then a retest of the confluence area, daily pivot and broken trend line as it would then be. I'd really like to see that come back to, let's say, here, because that would then give us, again, an inverted head and shoulder situation where we've got left shoulder, head, potential right shoulder as a break and retest of that area. That would see me come out of my shell and place a long order looking at the weekly pivot as a target. I would certainly be taking profit at the monthly pivot, depending on where I would get into the market as to whether I'd look to trade through the daily pivot or not. But if I do get that break and retest here, then I'd be happy to go long. Now, that is probably the end of the Kiwi for me. Again, I emphasize that there's something far bigger coming up. Well, it's overnight for most of us, I know, and early morning. That's the FOMC statement. So I'm, again, I repeat, not going into the market anything against the US dollar at the moment with any form of large risk involved. It'll be a very small stake trade if I do take one. Look, the other way to look at the Kiwi, of course, is that we are still underneath this descending trend line. We're underneath the pivots. If we were to look at this level here as the 66 cent mark, we have broken it, not decisively, but we've broken it, and we're now retesting that level. So there's a potential for this just to go A, B, C and continue down and forget all about my invisible right shoulder or my imaginary right shoulder here. It's just because I see that as potential doesn't mean it's going to happen, that's for sure. And of course, this could just continue to waterfall. I would be disappointed if that were the case, given that I have now closed my short. And maybe I should have left a little bit on the table, but really I've somehow convinced myself that we're going to bounce here and do form that right shoulder. But definitely there is potential for this to continue, no question. Take out this low and retest the bottoms here around about the 65 cent mark. So yeah, look, nothing's for sure, but we're still going with trend here. We've still got a higher high, we've still got a higher low, high high, high low, high high, high low. So the daily chart's not telling me anything but some potential here for this to bounce, and that level, if you want the levels that I'm looking for, it's around about there. I'll be looking to trade it up to 67, 67 plus-ish. I don't think I'd like to be going right into that level. So around about the 67 mark, I think is where I'll be looking to get out of that position. And then look for shorts. So I think that's got the Kiwi done and dusted. I just don't know that I'm going to get a trade in here today, given the potential compressed nature of the beast with FOMC upcoming. And look, if that's the case, bad luck. I don't mind that. When we come back this time tomorrow, this will probably look in completely different shape, considering or preempting, I suppose, that there will be some price action as a result of the Fed's announcement. So there it is. They're the two levels I'm looking at. Bounce off here up to this level or around about there, then look for the shorts. If we can trade it up to there, happy days. I think we might have to wait till tomorrow, however. We shall see. Another one I'm looking at quite closely, or was looking at quite closely this morning. In this morning show, I was warning our participants to look for a false break here that had already partially formed because we had, can't remember if we had that candle. Yeah, we did. So we've had the break, we've had consolidation above at the top of this rectangular or block channel, or what do they call those things? Rectangle. Yeah, that's the word I'm looking for. Also, a box. They also call them a box. Don't trade the box, everyone tells me. And if you're a trend trader, I would absolutely concur with that. I'm not a trend trader, and I love to trade these boxes. They just got to give me the right hints, that's all. This was going to be one of those as we came to the top of this range. That is now, what, 2 weeks old? Nearly 2 weeks old. Yeah, it is 2 weeks old. So when we're looking for trades here, we're looking for a bounce off the top, and then we're looking for a higher low. And that's a pretty simple equation for me, and that's always the way I play these ranges. So what I was looking for here was this candle, once we'd broken back below the rebroken trend line, if you like, was a rally back to at least retest this and give me a bullish bar, but better still come back and test this level. So a pull back to here, and that would have got me a short. Unfortunately, they decided not to give me that. Pretty much exactly what I'm looking for on the Kiwi, isn't it? On a bigger time frame. So that hasn't happened, and that's kind of ruled me out of play for now. But only for now, because we found a little bit of support. If we are still to come back here and put in that lower high based on this top, then I can still trade this short. That would be eliminated if we were to come down and break this weekly pivot. So it no longer becomes a lower high for me that I'd be seeking. It would be quite the reverse. If we came down here, I'd be looking for a higher low. So, it's like trading ping, 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 ping. And that's exactly how I love to trade. It's a really cool way to do it on the smaller time frames. Speaking of which, if we go there and take a quick squeeze, you can see that 4-hour trend line that I was just looking at. I'll get rid of that because it's not relevant on this chart. I don't trade 4-hour trend or trade lines on a 30-minute chart. So let's put it where it belongs and redraw this one. You can see that again, we've come off the top. We did kind of get a lower high here. Probably that one was tradable. If you're trading at that time of day on the smaller time frames, you probably could have looked to trade off there, as we did put in that lower high. Not significant for me, and nor do I trade the smaller time frames at that time of day. So I would still have been looking for a more substantial pullback than what we got, again, to retest a level. And I guess you could argue, well, you can argue that the daily pivot was that level. And sure enough, it appears to have been that. We're now getting a little bit of oscillation, it would seem, in between the two pivots. That really is something that I envisage being a common theme throughout the next, let's say, 12 hours or so, until the FOMC statement is run and or done and run and won and all the rest of it. So no trade here for me right now. I need to see either one of two things. We need to come down to the bottom here, then look for a higher low, or we need to come up here and produce that lower high that I seek. Euro Aussie, I'm a little bit well, not peeved. You know, you can't say that the news event didn't do what well, it did really, I suppose. The news event on the Aussie this morning did precisely what I asked. So why am I complaining? It's just gone a little bit further than I anticipated. What I was looking for was, and I'll go to a bigger time frame. What I was looking for here was this triple rejection, if you like, well, already double rejection, but potential triple rejection at that point of the monthly pivot. That has turned out to be the case, but I hasten to add that this was a news event, and I don't trade news events unless there's something really, really beneficial out of it, and it's totally obvious if there's such a thing as to what I'm looking for, and I'm willing to take a bigger risk. Not willing to take the bigger risk on this one this morning, but you know, if you go back to my first few statements today, and that was on the Kiwi, if you're looking at the 4-hour chart, where I'm looking for this to be a left shoulder, this to be a head, this to be the neckline, equal the neckline, and forming a right shoulder up here, we've got exactly that on its ear on Euro Aussie, totally unrelated currency pair. If I go to the daily chart, you can see that we've already had one going that way. But now, if you go to the 4-hour chart, you can see that there's potential. Well, maybe you can, maybe you can't. I'll point it out. That could be a left shoulder. That could be a big head. And this could form a right shoulder and become an inverted head and shoulders. Is that relevant in context is the question I always ask myself. So where I see an inverted head and shoulders is generally at the bottom of a run, so down here somewhere. I'm not really seeing that here. It is a mini, I suppose. You know, we're at the bottom of this run here, and I'm not ignoring it. Definitely not ignoring it, because really what it does mean is that if we come back here, the potential for a higher low on this base becomes strong. You can see with the euro that last, when was it? I can't even remember the event, but it put in this crazy price action here as a result of, can't remember what it was. It doesn't matter, but it was a news event that actually moved. It was probably the prime ministership, if I'm not wrong. Yeah, that's what it would have been. And since then, we've had a rally back up to the monthly pivot. We now know that the Aussies had good news today, and that's what has caused this candle. I would definitely be looking for follow through here. I'm not going to trade that candle. I'm not going to go short here. But what I would definitely like to see happen is price come back and test something. Maybe that something is the daily pivot, and maybe we've already seen it. But I want to spend more time here. I just don't want to go and jump into the market. Of course, this could just waterfall straight down to here. And if it does, happy days. It will do it without me. I would much rather see, you know, a little bit of time spent pulling back to maybe the daily pivot is the level. Maybe it is, but I'm just not ready to go short yet. So I want to see maybe 2-3 candles pull me back to here. Then I can look for a lower high. Then I can look to trade it down to this level, which is 1.6032-ish. So 1.603, if you like. So, you know, imagination, once again, is the key here for me. I'm looking to envisage what could happen. This is backed up a little bit more than is the Kiwi, because I do have that good Aussie news that has been posted already today. And the Chinese news wasn't too bad either. That affects the Aussie. So it really does appear to be a bullish day for the Aussie. And hence, when we've got a resistance level, gee whiz, I must be getting old. When we've got a resistance level that we have, and we've come back below a support level, and are now retesting that support level, it's very, 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 very easy just to go short. I'm going to wait, as I said. Maybe I can see it better on a smaller time frame, where we do get back here in, I guess, more timely fashion and put in that lower high. That's what I'm looking for. So a little bit of a rally. I don't see a level, unfortunately, to retest here anytime soon, and that's a bit of an issue. But that's what I need to see to trade this short. I'm just not going to jump in straight away, although, as I say, this could very easily just waterfall, given what I've just said about the Aussie and the Chinese news. I think it's an Aussie on day, and this may well be the cross that I'm looking to trade, but I need to see what I've asked for, and it's not there yet. Now, the euro, on the other hand, and conversely, I guess, to what I've just said, is very much a case of potential bull move as well, which doesn't bode well for my euro Aussie short, of course. The relative strength will be the determining factor there. There's that prime ministerial thing last week that just went mad. And now we've come off a little base that we've got here. We've got a triple bottom sitting here. We've got a support trend line. We've got very little price action. We really haven't moved too much. And this will be the basis of my FOMC breakout trade that I'll give you in not too distant future. The effective range here this week thus far is 34 pips. And that ain't too great. The range yesterday, the daily range yesterday was on euro dollar. Let me see. High of 111.60, a low of 111.31. So 29 pips was the range yesterday. We had a day last week that was 19. And that doesn't bode well for trading either, I can assure you. Very, very tough to trade under those conditions. So what I'm looking for here is, again, not to do too much because it is FOMC, it is against the US dollar. I'd be looking for this to come back here and maybe just hang around this area until the FOMC statement. Perhaps that's what the market will wait for, perhaps it won't, but that's my favoured position. And if it does do that, we're going to have a very tight range this week to be able to place this FOMC breakout trade that I will get to when I finish my wrap around the grounds. So do I have a bullish bias? Yeah, look, I do. And that's based on the base, if you like, because it's still so strong. We can't break through this level, which is, around about 111 that we're talking about. It's very, very strong, holding a support, has done for yonks. And if the wider you go, the more you see that this level is significant. It's held the market up here for the longest time before. It is also a confluence area. The bottom of this channel, this descending channel, has now come into confluence with that. And you can see how hard that prices work to break through the bottom of that descending channel. Cannot do it. Every time it does, when I say every time, the twice that it has done since 2017, if you like, has been failed or was failed here and here. So you can see how strong this level is. And that's why I guess we're seeing a little bit of a bounce as we speak on all charts. But it's not too strong. And, that's the concern. And again, I think we go back to the FOMC statement that's coming out in about 12 hours' time. And maybe that's what the market's waiting for to determine which way this is to go. So what do we do? Well, I'm not going to trade this, as I said. Even if I got a pullback here now, I'll re-rack that and say, if I got a perfect setup, inverted commas, is there such a thing? Then I would trade it long, and that would be if price actually came down here and broke this level, this trend line. But broke this trend line, didn't take out these lows, so maybe consolidate a little bit around this DS2 level, then got back above, took out the highs, and retested the trend line, then I would look to trade it long. But only then. I'm not going to trade long from here, no question. So I need to see that pullback, but I don't expect to see that. And for that reason, if if it's still hanging around here, around my bedtime, I certainly won't be staying up to play it. So that's really it. I've got no intention of trading it short at this point. Why? Well, I've just explained it as much as I can. I'm not going to trade through this level here. The only way I would trade through that level there is from up here somewhere or up here somewhere. We've got absolutely no interest in trading short at this level. So that is euro dollar. I've got Aussie Kiwi here. This is a real disappointment because I was waiting to trade this long. I just don't know that I still can. A big move on the news, of course, and we're getting a nice retracement on that. It would then look like a break and retest. Well, it would be. Wouldn't just look like. It'd be a break and retest of this intraday trade line on a 4-hour chart. The bigger picture gives me this, which is very interesting as well. You can see that we've got a fairly strong support level here, and here. We've actually broken that, but we've come back to have another look at the bottom of this trend line here, which is represented on the daily chart. So you can see we've had, not for the first time, actually, let's get that perfect. So not for the first time, we've come back to have another look at the bottom side of this. This is interesting. If this is to hold again as resistance at this confluence area, you would expect this to come down and have a look at these lows here, around about the 1033 mark, something like that. However, if this was now to break back above this trend line, that's an entirely different kettle of fish. So what I'd be looking for here is a signal to suggest either one, and that would come as certainly a break back in here if I consider that there's a long on and then a retest of the re-entered, if you like, or rebroken trend line. To go short is a tough assignment because we've already had this. As I said, it's not the first time we've been here, so it makes it really unsure as to whether we are going to break through here or we're not. So I really need to see that happen. The other way to look at it would be, let's turn it up on its head. And this line that I just spoke of, this little intraday trend line, if this were to break again and we got a retest from below, that turns me into a bear. So this line's significant, this line's significant. And that will tell me the tale of the story. If we get back up here and retest, then I'm the bull. If we get down here and retest, I'm the bear. So that's pretty much an easy one. And I'm really happy to trade Aussie Kiwi into FOMC because it really shouldn't be affected, nor should Euro CAD or Euro Aussie. It's really only the dollar pairs that I'm a little bit wary to trade today. We'll move along to Euro Yen. And again, I'll give you that breakout trade on Euro Dollar in the not too distant future. This actually looks very interesting to me. And I said this yesterday, and I'm really considering this one right now, as a matter of fact. We've got considerable confusion, if you like, going on in this area. Since we had this big move, again, that is that'd have to be a prime ministerial thing, I think. Tuesday, Monday, Friday, Thursday. Of course, that happened on Thursday or Wednesday. Anyway, it doesn't matter. We got up here and we found the weekly pivot as a resistance level. We've come back off that, and guess where to? The new weekly pivot. Now we've broken that last week's weekly pivot, come back to retest it, and now we're hammering it again, hammering that same level. We're also hammering this trend line, which is interesting to me. And I said this yesterday, this looked to be a shot over the bow for me. This is a signal for me that this big bear bar, which followed this indecisive bar was a precursor that if price came back to this level, it would find momentum and shoot through and even seek out the monthly pivot. That's kind of still there. I'd really like a bit more time spent down here to come back, to be fair, but it's really threatening to do this. And I'm very tempted. Very small candle, but we could sneak in some profit here. It's got a little bit of ascending triangle about it. Euro yen. Look, I think we might even try this, guys. We might even try this. We'll place an order here. I'll do it on the trade manager. So I don't have to monitor it too much. Okay, so we're going to play a break of this trend line. So it is a breakout that we're trading. We're going to anticipate that, as I said, this precursor that I've been watching is indeed going to come into play, and price should rocket up to here if I get this right. I'm going to put my entry above this candle here. I'm going to put my stop below this candle here. So let's find out what those levels are. It's 121.19 will do for an entry. 121.19. We're going to have a stop loss of 120.97. 120.97, giving us a very small risk of 22 pips only. And we're going to take profits. We'll go to TP1. Oh, look, risk what you want on this, but not too much, guys. Well, I shouldn't say that. Don't risk too much on this. It is NFP, not NFP. It's FOMC Eve, as I said. Shouldn't affect this currency cross too much, but bear in mind, there's always the flight to safety with the yen, so it still could be affected by what we see. So look, I'm just going to risk 0.25% on this. I think it's not going to be too devastating if it doesn't win. TP1 is what we're looking for here. Righto, first take profit is going to be, I think, about yeah, 121.33 will do. So I'll make that 121.33. And I will take 1/3 of the position off at that point. And I'll leave my stops where they were. What did I say that was? 22 pips. So I'll return that to its former glory. 22 pips will be the amended stop loss, which won't be amended at all. It'll be exactly where it was. TP2. Let me see if I can find a TP2. Can't really see anything, can I? Oh, no. No, I've lost my thing. Okay, so TP2 looks fairly obvious. Excuse me, I've got a sneeze. Oh, told you. Sorry about that. I hope I didn't blast any eardrums. TP2 is clear. It is just underneath the monthly pivot, and it's 122.08. Now I've got to put all that back in again, I think. Gotta love that. Sorry about this, guys. Entry was... No, I've got to do it again. Entry was Let me go. Don't do. Oh, that disappears again on screen. Entry was above this bar here, and I called it as 121.19. And the stop loss was 120.97 from memory. Get rid of that, take profit, don't need it. TP1 I need. Disable the stop loss so I don't have to put it back in. Go back there. The target level was 121. Oh dear, I've forgotten. 121.33. Okay, 121.33. I hope you didn't have anything to do, guys. Proportion to close, 0.34. And the stop loss is disabled, so that will remain where it was. TP2, as I said, fairly obvious, just underneath the monthly pivot. We'll call that 122.13, I think I said. So we need to get rid of that. And our target level, 122.13, where once again we'll close 1/3 of the position. And we will move our stop loss to entry at that point. That's all we need to do. It is a buy order, so we click buy. And here we see our entry, as I said, above this candle here, our stop loss below this one here, and significantly the trend line. Our take profit before the twin peaks, again significantly. And our second take profit before the monthly pivot, again significantly. So if this does go and we get to the monthly pivot, and I'm not here to tell you what next I'm going to do, I will trail the stop. Probably trail the stop on swing lows on the 4-hour chart. So, for instance, if I was trailing now, I'd have the stop pretty much exactly where it is. If we get a swing low up here, I'll put the stop loss underneath it, etc., 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 as we move up. So that's pretty much the plan. On euro yen, long at 121.19. Euro pound, goodness gracious, Ignatius, would you look at what happened yesterday? We got a follow through on the day before, which was substantial, absolutely crashed and smashed and bashed every single resistance level in its way. I'm not willing to trade this at all at the moment because I really have no idea what can rally the pound, and I'm not going to trade long here. No way. This is a real overbought marker for me, or overextended marker, and there's no way I'll be joining in at this point. It might have been, you could have been excused for doing that yesterday. You can be excused for doing it any time you like, but it's not in my vocabulary or itinerary or agenda or anything like that to trade along at this point. So I won't. I'll be looking for a substantial pullback before I do. So I'll just leave that one alone. I'm not going to trade it. Same could be said of the pound. Look, I've been trying to buy this for the longest time, and it just continues to fall and fall and fall and fall. Why is that going to change? I have no idea. Now I have no idea. We had potential for that to happen based on this double bottom, based on this higher low, based on this higher low, based on this hammer, which was matching the double bottom, based on this tweezer bottom, which was matching the double bottom, and I put an entry on every single one of those, and not one of those triggered since these two did. We traded that one and lost. We traded this on an hourly time frame, won a small amount at the monthly pivot, and then got a break-even trade out of it. And we traded this one, no trigger. We traded the tweezer bottom, no trigger, and continues to fall. 120.37 looms as the next stop, and who's to say it can't go further than that? Not me. what would I need to do to trade this, or what would I need to see to trade this? It looks like a miracle currently, but I'd really need to see something like a double bottom, something like that, something like an inverted head and shoulders, a shooting, not a shooting star, what do they call those things? Morning star or whatever. Something that indicates to me that this is coming to an end, this incredible, incredible sell-off of pound US dollar. And even when I see that, I need to see something to back it up, like a higher low. So forget the pound, ain't trading it anytime soon. Aussie yen, looked at this on Monday, and in the Monday show, I was talking about this potential for this to be a false break and why I couldn't trade this long here. And that turned out to be a very wise decision. Not that there was any decision to make, because the candle was only 7 or 8 pips or whatever it is, and on a 4-hour time frame, I ain't trading a candle that big, or that small rather. And I certainly didn't want to trade into the monthly pivot where we saw exactly what we expect to see, and that was a rejection of it once it's been broken, a second rejection of it, and the market falls away. Why didn't I trade that? No setup. Frankly, I could have traded that bar, but that happened at the wrong time of day. In fact, in retrospect, that would have been a great trade. But in retrospect, we're all great traders. There's no question there. What next is the question that I now have. We've now broken this this consolidation rectangle, as you can see. Probably expect at some stage we'll come back and have another look at that, but I don't think it's a valid structure anymore, so let's get rid of it. On this time frame, neither is that, so let's get rid of that. And we're left with a market that has come down for the entire year. Not really. No, it had a little bit of an effort to eke its way back to the 80-cent mark. I think it actually achieved that. Yeah, got over it, in fact. But since then, it's been a big sell-off on Aussie yen. Now, Aussie news today, again, go back to the positive news. Is that strong enough to warrant a buy here? And gee, there's a good question. I don't see how I can buy here, and the reason I say that is the range is broken. The range I just spoke of. The monthly pivot has been broken and retested. This tiny little candle here has retested the monthly pivot. I don't see this as a buy. We're not at a support level, well, that I can see anyway. I think the support level is probably here, around about the 74.30 mark. So I'd be expecting price to get down to there at some stage. So I'm not a bull on Aussie yen, despite the fact that I am slightly bullish on the Aussie today. I don't see how I can trade this. If I were to see on a smaller time frame a clear reversal scenario, how clear do you want it? This is a substantial bullish engulfing bar without question. It's an emotive one, however. It's based on the emotion of the news. It now depends on what happens after that as to what is tradable. Now, if I were to see price get back to here, say, so back to here and put in a big reversal bar, that changes things, because that then makes this big bull bar, big bullish engulfing bar, that then makes that potentially good. Why? Because this becomes the line in the sand for the reaction, if you like, to the news. This is where you would expect the pullback to come to. Why? Because it's where the market broke out. Yes, I know it's a dreadfully small range, but that's the breakout area. You could argue that it's already been retested, and you could argue a very strong case for that. I can see that, but that's also in the emotive area for mine. I'd like to see the market proper, and the market proper, as I like to think of it is the UK session. I'd like to see the market proper, bring price back down to here, and then tell me what's going to happen at this level. So this level for me is 74.65-ish. If we do get down to here and get a reversal bar, I think that then becomes a tradable proposition, and definitely a long. But not yet. I'm not going long yet. And that doesn't mean for 1 second that the market can't just continue to go long. Of course it can. So to break and retest of a daily pivot after all. But for me, this is the level here I want to see retested. So Aussie Yen Yetsky. Aussie CAD. The Aussie CAD I was setting up for, I think I was setting up for a long 2 days ago. And again, just like the pound and the pound pairs, Gonski, there was absolutely no opportunity to trade this long. There is a very, very similar scenario to what I've just described on Aussie yen, not surprisingly, given that we've had that news. So we've got a big bullish engulfing bar, but gee, we've come down a long way. I can see the daily pivot being retested currently. And again, similar to what I've just said on Aussie yen, this could just bang, continue and skyrocket. And I don't have any problem with that. Do I have a problem with... No, look, I don't see how I can trade this long. We've got an emotive bounce, and that's all we've got. One emotive bounce, and that needs to be backed up for mine. And I don't really see a level. Where's the breakout here? I don't see the breakout even, like we did see on Aussie yen. This is just continuing to fall, so it's under extreme pressure. And I ain't about to trade this long based on one news emotional reaction. So no, not for me. Even if I saw on the smaller time frames, and again, you could argue that the range has been broken, but I think this is really taking range to another level. This is not a substantial range by any stretch. And same scenario, we've broken it. We've come back and tested it immediately and gone on with the job, come back and retested the daily pivot. Look, I can totally see why you want to go long here, but it's not in my vernacular or vocabulary or agenda or toolkit or anything to do that, because this is one move. I want to see it backed up by a higher low before I get into it. So no for me on Aussie CAD. Aussie US dollar, same. This is a bit of a range. Again, it has been retested, so you've got every right to think that this could go long. And I wouldn't argue the case. What I would argue is that it's not for me. Interesting, though. It again, similar to what are we trading? Euro yen. If you have a look here, the shot over the bow that I spoke of here, little indecisive bar pullback off the trend line. If you have a look at this one here, you're seeing something similar, really, where we've had a little indecisive bar and then a pullback. Don't really have a substantial trend line. You could pull that down from there to there. I'll pull this one across from here. It's a little bit early, I think, for me to be thinking to trade this long. So again, I want to see price come down to here, retest this level. Have I already, no, I'm on the same. Sorry, I'm on the same chart I was before in Aussie yen. This is the one we're talking about, Aussie. This is really not that early. The issue I have with this one is this level here. Why would we think that's going to break? Because we spent so much time here, day and a half we've spent in this area. It is a whole number. It's the 69 level, 69 cent level. Do I want to trade straight into that without some profit in the bank? Answer, no. So similar to what I've described on Aussie yen, and you remember that red line that I just saw, I want to see this back here. And when we do get back here, a rejection bar of some kind, a reversal bar, then look to trade the breakout, not from here, but from here. This is the key for me. Allow price to come back down, let it reverse, not up to here, just a nice little reversal bar. I'm on a very small time frame, on a 30-minute chart. If I were to see that, then I start to get interested, but not until then. If we were to come back and retest the daily pivot now and not come to here, and we got a reversal bar, that also would interest me. But the key level here, or the key for me, is to get profit in the bank, not before this level because it's a new high today, but before this level here, which is not too far from the same thing, I know. That level there, yesterday's daily pivot, that's the one I don't want to trade into without profit in the bank. And it's, again, it's the figure, 69 cents. So I don't want to be trading into that without profit. So that's why it's important for me to get the trade off from down here and not here. If it doesn't happen, it doesn't happen. And if this smashes through here, then so be it. If enough time passes and we find that we just hang in here, hang in here, hang in here, and then get over to here, maybe there is enough room to take profit before this level. Maybe there is. But then you've snabbled with another problem, and that's trading into the high of the day. So, that's why I need pullback. That's really underlining. I need trade from here, not here. Not saying it can't. I'm just saying this is a better trade. It's a far better probability trade for me. Guys, I'm going to have a look at a couple more. It is half past the hour. I'm not going to have a look at the pound pairs. No waste of time, really. Kiwi yen, I'll have a quick look at that. Not on that. Dollar yen. Dollar yen's interesting because it's at the top of the range. Yeah. Kiwi yen. I want a Kiwi yen chart. I was looking at that this morning. Kiwi yen, Kiwi yen, Kiwi yen. Kiwi yen. We got to find a Kiwi yen from somewhere. Okay. Show all. Kiwi, Kiwi, Kiwi. There it is. It was already there. Let's have a look at this. I know I was looking at it this morning. I just don't know what's happened since. Let's put my template up. Okie dokie. Yeah, that looks a bit interesting. Daily chart. Daily chart has turned over and come to this strong support level, as you can see. And that's why this is interesting right now. I see this level and I see the potential for this to bounce or to break and take on these lows. Little hint of a double top here. I'm not going to call it a double top. It's actually a higher high. This is a higher low, and this is now the question mark. I considered this to be an excellent buying opportunity. And that's based on, I know this is not a clear double bottom, but this is a clear level here as well. And we've got a higher low. We've now got a potential equal higher low. That to me is very, very interesting. How do we trade it? How do we trade this? At this point in time, I'm not seeing how we can trade this. Perhaps we've got something there. Yeah, okay. I'm not in love with this trend line or trade line because it is a little bit acute, but I'll call it a fair trend line, fair trade line. So what I'd like to see here is pretty clear to me. I'd like to see the monthly pivot break, the resistance trend line break, maybe even the daily pivot break, but I'd much rather trade into the daily pivot if I can find some profit in here. So break, retest. If I were to see that on any time frame, mind you, 30-minute fine, hourly's fine. If I were to see that happen, break and retest of this confluence area that's my signal to go. Now, the pivots are mixed here, so I'm not seeing an actual outright trend. Again, going back to where we started the day, I suppose, on the Kiwi, and no surprise that this is a Kiwi cross. Look what we're seeing. We're seeing a big left shoulder, a big head, a defined neckline, and the potential for this to go back to this area here. It's the same chart, really, at the end of the day, isn't it? Is it the same chart? I had to have a look then, just to make sure it wasn't. So, yeah, the key level here is absolutely clear, isn't it? It's the monthly pivot. There would be people who will notice that this candle, if it closes in an hour and a half, pretty much where it is, and I'm on the 4-hour chart now, if this were to close here, there's a definite case for an A, B, C short. I would, apart from my bias, I would not be taking that trade with any big stake on the table. Reason, the daily pivot's not tested, is 1. I think we're a little bit oversold. 2, we've had 1, 2, 3 moves down. Not sure there's enough gas in the tank to get through this level, and that's why I'm hesitating to say okay short. Definitely, I can see a crown forming here. Again, it's out of context because you like to see head and shoulders, up here somewhere at the top of a big run. This is a run, but it's not substantial in any way, shape, or form, in my humble opinion. So I'm probably talking cause and effect here rather than, okay, I'm predicting it. I'm not predicting anything here except that this is the key level today. And if it breaks, then we're back down here. But if it holds, we're certainly looking for this level here and up here as well. So, yeah, I'm pretty focused on the Kiwi and Kiwi yen for that purpose. I think there's potential here to trade these. We shall see. Why do people try and ring me this time of day? I don't know. Sorry, guys, it's my wife. She who must be obeyed. And for that reason, I'm going to leave you very shortly. But before I do, the Euro US dollar breakout trade. I want to show you that. And here it is. Okay, here's the way I trade it. It is simply a breakout in either direction. So I'm predicting that whatever the FOMC throws up at us, we will get a breakout of this area, up or down. No idea where, don't care, as long as it does it. And it's based on the principle that if the FOMC statement coincides with the press conference and the number, and we go in one direction, it could actually be trend setting. The one issue that there could be is if one or two of those 3 scenarios are out of alignment. And if they are, you could get price action like this, which is really, really bad. You don't want that. That's not what we want. But here's how I do it. So I go to the first 3 days of this week, Monday, Tuesday, Wednesday, and I pick the range of those 3 days. At this point in time, that range is somewhere between, this is Monday, somewhere between here and here at this point in time. That gives us an effective range, or it gives us a range, not an effective range, of about 50 pips. Let's say 50 pips. Now, what we do is we put another line in the middle of that range at 25. So come 25 off there is going to be 27. That doesn't look right, does it? Oh, that's 62. It's 37. Okay. That makes more sense. Okay. So there's our scenario. Let me get rid of that one. What we're predicting here, well, we're not predicting anything except a breakout. But what we're saying is if price breaks this level, it's going here. And if price breaks this level, it's going to hell in a handbasket. Maybe to break this entire area, right? The FOMC statement can do that. It can actually drive this. And we finish up. I can't even go wide enough. There we go. And we finish up down here somewhere. So there's potential in the short of maybe 650 pips. There's potential in the long, if we were to break out here, let's say here, 400 pips. You know, I'm talking realistic potential. So that's why I like to trade this, because the FOMC statement can actually turn a range into a trend. And if we're lucky enough to catch that, then we can get big rewards out of this. So you don't need to risk too much, but here's the way you trade it. 4-hour chart. Come back to me. There we go. 4-hour chart, get the range. We've affected the range between Monday, Tuesday, and Wednesday. So the first 3 days of this week, we've put a border around that range, and we've come halfway between it. Now, why do we come halfway between? Well, the reason is I don't want to take the trade if price is up near the top or down near the bottom. And the reason for that is you could get pre-news jitters where somebody presses a button and we get price action down to here, and then the news comes out and we go whoosh. That's what we don't want to happen. So the safest way to avoid that is to make sure that when you place the trade, which has to be around the news event, you can't place the trade before you go to bed and wake up and goodness me, you could be in the trade up here for no reason. That's what I mean. It has to be placed just before the news comes out. So you put your entry for the long, 15 pips, 10 or 15 pips, take your pick. I generally use 15 pips when I'm on a small range like this. So my entry would be at this point, providing the range doesn't get any bigger, my entry would be around about 111.77, say. So 111.77 would be my long entry. It would also be my stop loss for my short entry. So let me show you how this works. If you've got a trade manager, this is how you do it. If you haven't, then you have to be a little bit more clever. Right, so instead of going into strategies, you click over here on the trade manager. You open up these inputs and you go to, the first thing you go to is whatever your risk percentage is going to be. For argument's sake, I'll go 0.25%. You then come down to a little tab called Enable OCO, which is defaulted at false. You open that up and you go true. You then scroll down to entry level 1. You tick buy entry level 1 true. And you put in the entry level. Entry level 1, which is the buy order, right? And we said the buy order was going to be at 111.77. So entry level is 1.1177. Our stop loss level, this one here, is going to be 15 pips below this low, which is going to be 110.97. So one you grub. I hate it when I do that. Have we still got that naval OCOs right? Entry level 1 is true, 111.77. Yep, got it. So stop loss level, let me try that again, was 110.97 if I recall. There's that one. Now we go to entry level 2, but it's not buy entry level 2 this time. It is sell entry level 2. So we make that true. If you don't get this, guys, and you are using a trade manager, if you're not up to speed with me, then you can watch this back on the replay. Sell entry level 2, and the entry level 2 will be, guess what? The stop loss level on the buy order. So it's 1.1097. 1.1097. And your stop loss is, guess where? Stop loss level 2 will be the buy level, which was a 111.77. 1.1177. Now you have to do a couple of more things. They're set, everything's set there, stop loss, blah, blah, blah. We've got all that sorted. Trailing stop. We don't want trailing stop yet. We want TP. Trailing stop loss. Is take profit 1. Right, there we go. Take profit 1, we will enable. True. And I use a proportional target of 0.95. And I close 0.55% at that point. So effectively, it's a one-to-one trade. Once you've got that, you just take half off and do nothing else. So stop loss doesn't move. TP2 doesn't happen. We'll just, by that time, we just let it rip, just let it run. And that's all we need to do. I don't think there's anything else that we need. No. All good. Now, I have been asked this before. There is a safety mechanism built into the trade manager. I'm not sure where it is. It doesn't appear to be here on my chart. But what it will do, there has to be a setting for this. It's probably in there's gaps somewhere. I don't know where it is, but I'll tell you what will happen. If you get slipped by a margin of, I think it's 5 pips it's set at, if you were to get slipped by 6 pips into this trade, the EA will not take you into the trade. Okay, that's to protect you. So if you wake up, well, don't wake up. Don't set this. Please don't set this until just before the news, right? Yeah, you have to be in this vicinity. Have to be somewhere near that red line, providing the range doesn't change. Of course, the range could be up here by the time we get to the news. I don't know, but you have to adjust accordingly, right? If that were to be the case. So that's all you need to do. Then press OK. Buy at entry level 1, yes. Sell at entry level 2, yes. And you can't see anything except the stop losses, right? The stop losses and the entry levels are exactly the same. So let me blow that up a bit. You can see there that we've got our buy entry just above DR2. We've got our sell entry just below DS3. Now, I know some of you, if you're strategy leader, if you're in the strategy leader coaching group for the slingshot, you will be horrified at that. This is a completely different scenario. The scenario is that we are expecting a big breakout here. That's got nothing to do with trading inside our normal ranges, okay? So you're excused. You may set those parameters, no problem. So our entry for the buy is our stop loss for the sell, and vice versa. Hopefully, guys, that has been clear to you. If not, look, don't trade it. If it's not clear to you, don't trade it. If it is, then trade it with caution, and please don't put please don't put those. I'm going to cancel this now, right? Please don't set that until near the news. You have to be up really early, I know, and don't set it if we're anywhere near the top or bottom of this range. You really want to be within 10 pips of this 111.37 mark. Okay. You don't want to be setting this if you're up here. You don't want to be setting this if price is down here, because you easily get triggered in and then shot back out when the news hits. Goodness gracious me, would you look at the time? I'm just going to have a quick squeeze around the 30-minute charts, and if I see anything, I'll let you know. Otherwise, I am going to bid you adieu. Nothing there, nothing there. Yeah, it's tempting, but I don't have a setup that I want to trade here on Euro Aussie, but gee, I'm keen to get short if I can. Euro dollar, I've got to get rid of that. Do or not? Yes, I do. Let me get rid of it before I forget. Gone. Okay. 30-minute chart, what I'm looking at, yes. Bit of a double top, back to the pivots. This is going to look really, I think this is set up beautifully for a range before the FOMC statement. We've got the pivots very close together. I don't expect euro dollar to move too much. Maybe down to the bottom, maybe up to the top, but I don't expect it to be moving too much. Kiwi versus the Aussie. Yeah, big pullback. Is this enough? Well, it's now retesting the back of this trend line. If you can find a reason to trade here, then maybe the longs are on, and that wouldn't surprise me at all. I need some confluence here to trade from, and I haven't got it. So no for me at the moment, but I'm keen. As I am on Euro Yen, can I trade it on a smaller time frame back to my entry? Not at this point. We're in the middle of nowhere, as you can see. Resistance here, support here. We're in the middle of that. Don't want to know about euro pound. Don't want to know about the pound. Aussie yen. Yeah, look, it's doing okay. If we can come back to here, as I said before, happy days. But if we were to now come over to this area and we can find enough room to trade with profit in the bank, then I'm happy to go long Aussie yen. Aussie CAD is very, very similar. But I want to see a bigger pullback on Aussie CAD. And I don't like this as much as I like Aussie yen. I don't, because this little range here is just a pain in the backside. And the Aussie, same. If we came back to here, look for reversal and trade it long. Again, if we can spend some time and get over here maybe and trade with being able to put profit in the bank before these highs, then happy days. Otherwise, got to wait, guys. So there we go. A couple of trades in the session. 1 euro yen on the 4-hour charts, and looking to trade that long as a breakout with our entry level at 121.19. First take profit at 121.33. And our second take profit at 122. How's my maths going? 13, I believe. It could be right. It could very well be right. And the other one, of course, is that breakout trade that I showed you. If you're not following that, don't trade it. If you want to have another look at it, you can look at the replay in just a tick when I close the session, which I'm going to do. Guys, goodness me, we've managed to fill another hour and a half, just about. Ash, hopefully, and Ash apologised. I was going to tell you about the FTSE, wasn't I? Ash was bearish, the FTSE, and has been for the longest time, but he has been hedging with all of these longs that have been happening. and he's managed now to get out of the positions that he was in, out of the shorts. He's hedged his way into profit, and the trade has been profitable for him. So he's out completely of all the positions now. He wanted you guys to know that. And first day of the month tomorrow. It's the last day of the month today. Don't forget, it's FOMC overnight. Also, don't forget the likelihood of anything against the dollar moving in a technical fashion between now and then is probably not high. Okay. Have a great rest of the day and a great rest of the week. We will catch up with you tomorrow at the very same trade time and the very same trade channel. Bye-bye, guys. Have a good one. Bye-bye for now.